Hi guys, see Rachana Ranade here and I welcome you all to the part 2 of episode on bonus shares. Just in case if you have not watched my part 1, just click this link or maybe this link, whatever is the case. You'll be able to watch the part 1 of this bonus shares video and then only continue with this one. In the last video, I had left you with the taxation impact and I told you we'll take a proper example so that you can understand the full taxation impact on bonus shares. So that you understand this in a proper way, let me quote an example for you. Okay, let's suppose that you bought shares of a company, let us say, I'll tell you with dates so that it'll be easy for you to understand it. On, let us say, 1st of November 2018. Okay, and assume that you bought shares, only one share, let us say, at rupees 1000. Okay, please be very careful on the timeline. On 1st of November, it is buy. Okay, you bought the shares at 1000 rupees, only one share you bought. Now let's say on 1st of January 2019, let us say, what happens is that company declares a bonus. Okay, bonus is declared in the ratio of 1:1. Okay, understand that the price from 1st of November to 1st of January is obviously going to be different. So let's assume that the price is 1200 rupees on 1st of January, right? Now what happens with 1:1 bonus? If you have seen my Ask Rachana episodes as well, I have very clearly given an example, but I'm going to repeat it here. What happens in bonus share is that instead of one share, now you'll have 1:1. So now you'll have, so impact will be, now you'll have 2 shares of this same company, correct? But the important point is, what will be its value? Before bonus, we call it as cum bonus. Okay, before bonus is known as cum bonus. The price was 1200 rupees. X bonus means post bonus. This price will go down to 600 rupees. Okay, please remember this. 1200 price, when 1:1 bonus is given, 1:1 is double the shares, that is half the price. So price will be now 600 rupees per share. How did it impact your investment? Technically speaking, nothing, because originally you had one share. Okay, originally you had one share which was trading at a current market price of 1200. Post bonus, now you'll have 2 shares which are trading at 600. So the value remains intact at 1200. This is theoretical. Okay, what could happen practically is that this share price, which was trading at 600, immediately people start buying more and more number of shares, which I have also discussed in the previous video, part 1 of bonus shares. Sasta ho gaya na share, because it is cheap. More and more people will start buying the share because of greater demand. Let us say the price moves up to 700 and let us say now moves to 800 rupees in a matter of few months. Okay, so now what happens is that, assume currently it is trading at 800 rupees per share. So let me give you a further example. Let us say on 1st of December 2019, let's assume that it is trading at 800 rupees per share. Is it clear? And on 1st of December, you take a call that let me sell off my shares. How many shares do you have? How many shares do you have? 2, because one you had bought and one you had got free of cost, right? So now what happens with this 800? Let's please understand this with the help of an example again. I'm going to continue with the same example. So this is your first share which you had purchased, and this is the second share which was your free share because it's a bonus share, right? Now let's understand the taxation impact. I'll scroll you up for this because we had bought this share on 1st of November 2018, correct? 1st of November 2018. Tell me what was my cost price. Cost price was 1000 rupees. So my cost price of the first share is 1000 rupees, right? Tell me, on 1st of December, what is the current market price? Is 800. I'm repeating, it's also known as the LTP. Okay, so the selling price, LTP, is 800 rupees. What has happened? What has happened? Are you in profit or are you in loss? Yes, you are in a loss of 200 rupees. Don't panic, I'm going to tell you everything. You might say, Arey, but we have 2 shares. I'm going to tell about it. Wait. Okay, so loss is 200 rupees. Now please understand, this is known as a long-term capital loss. Why long-term capital loss? Because you had held this share for more than 1 year and then you have sold it. So let's check when had we bought this. We had bought it on 1st of November 2018 and we have sold it on 1st of December 2019. So it's more than a year that you have been holding this share. So this is known as a long-term capital loss of 200 rupees. Okay till here? What happens in the next case? Second share. Tell me what was the cost price? क्या लिखा है इधर? मुफ्त आता ना advertisements में. It's free of cost. Cost price is 0 rupees. Okay. What is the selling price? Selling price is 800 rupees. Are you in a profit or loss? Yes, here you are in a profit. But wait. Profit is 800 rupees, agreed. Question is, when did you get this share? Anyone? When did you get this share? You got this share as a bonus share on 1st of January 2019. And when are you selling it off? You are selling it off in December 2019. So is this a long term or is this a short term share? This will be a short term. So now what happens? This is a short term capital gain that you have got. And there's a tax for this. You have to pay tax at the rate of 15% on this. Okay. So you'll have to pay 120 rupees tax on this. Fair enough? Now what happens? You'll say, "Arey madam, but this is 120 rupees tax we are wanting to pay. Let's do an idea. Let's tell the government that government, I have got 800 rupees profit and I've got 200 rupees loss. So if I net it off, I have only 600 rupees left with me. So I'll pay tax on 600 rupees. You will say anything, but that's not allowed. It has to be written in the tax laws. Okay. Income tax laws very clearly mention that your long-term capital loss cannot be set off against short-term capital gain. Okay. I have not set these rules. So please don't say bad things about me. It's the government of India which has made these rules. It's their discretion. Okay. So as a thumb rule, you have to remember this. Long-term capital loss cannot be set off against short-term capital gain. Right. So what will happen with this? With this 600 rupees, are you allowed to pay tax on 600 rupees? No, you will have to pay tax on entire 800 rupees and you will have to pay a tax of 120 rupees. Okay. I hope this short-term capital gain thing is very clear with you, right? Now, if just as an example, if you had a long-term capital gain, okay, so if in the same thing, if I presume that instead of 1st December 2019, if you would have sold on, let us say 1st December 2020, and let us say you would have sold this at 1000 rupees round. Okay. I'm talking about that free share. Okay. So what happened? Cost price remained the same. Selling price is now 1000 rupees. So tell me what is the profit? Same 1000 rupees. Now will you have to pay any tax on that? Answer is no. Now it becomes a tax free thing. Okay. So be very careful when you are selling the bonus share that you have got. Many people confuse with the fact that they will take this date into consideration, your original price, where your original buying date. That's not correct. The date which you have to consider while selling the bonus shares is the date on which you got the bonus share. Otherwise, unnecessarily you will have to budge out 15% of your gain. It's good paying that you are paying tax, but don't pay tax if you can avoid it. I'm not saying evading. There's a difference between evading and avoiding. Evading is illegal. Avoiding is legal. Okay, so what I told you is a good way to avoid tax. Just be sure you are selling it post 1 year so that it becomes a long-term capital gain. I've discussed this in many videos, but just as a reminder, up to 1 lakh rupees, your long-term capital gain tax is exempt. Anything over and above 1 lakh rupees get taxed at the rate of 10%. Right? I hope you have understood everything about bonus shares. There's also a very, a little bit difficult concept, I may say, about grandfathering. It's a bit tricky to explain this. I would need to draft a similar example for you all. So let me know if you want to know about what is the grandfathering concept. If I get many yeses for a bonus video on this as well, on grandfathering concept, I'll be happy to shoot a fresh video on grandfathering concept. I hope you have understood this very well. Yes, that's it from my side. Enjoy watching my videos. That's it. Bye bye. Jai Hind.